the moment. Saurabh, hi, good morning. Lending to these non-investment grade companies is pretty high for some of these banks like Yes Bank, IndusInd Bank, etc. In fact, we are getting a lot of downgrades this morning as well. Do you foresee more pressure for these larger private sector banks, and would you advise investors to sort of churn out of these names now?
I think the two private sector banks where I think all of us with a degree of confidence have faith in the management and in the management's judgment regarding credit quality are HDFC Bank and Kotak Bank. Beyond HDFC Bank and Kotak Bank, I think all other banks it's a question of degree. To what extent have they already recognized their dud assets? To what extent have they been hiding their problems? I would believe that with the new management that's taken charge of Axis over the last 6 months or so, I think Axis too is broadly along the way of having cleansed the bulk of its past issues. So HDFC, Kotak, Axis in that order, there's a degree of faith that the balance sheets have actually been cleaned up. Beyond that, it's all quite murky out there. It's all quite murky because, as we are seeing almost every day, what sort of audit quality these firms have is questionable. Not the banks, the companies that the banks have lent to. With regards to the banks and the NBFCs, with the banks, the RBI at least went through AQR, and the AQR that Raghuram Rajan triggered, I think at least forced the banks to come clean. But hey, on the NBFCs and HFCs, we haven't been through that exercise. So I think the bond market, the financial system is saying which NBFC's accounts do I actually believe in, and that's creating a further layer of challenge there. So you've got sort of multiple layers of challenge. It's lenders struggling to assess corporates' actual financial strength, the financial system, the bond market trying to assess NBFCs and HFCs' financial viability, and all of that playing out in a weak macro environment, which is why I think the next 90 days are absolutely critical for the RBI and for the brand new government.
Yes, by the way, just some bit of buying. Mothers and Sumi is interesting because for the last 2 or 3 days there's some buying which is happening in that stock. So that stands out. And on the way down, NMDC is seeing some selling pressure today, down about 4.5%. Saurabh, your thoughts on metals? Tata Steel is trying to bounce back after that setback from Europe on ThyssenKrupp. In general, where do you see the cycle headed? And what would be a good way to play this?
I think, look, Anuj, I'm not a metals expert. The two drivers I've seen of metals in the last sort of 10 years I've lived in India is on the first side the first driver is that around 60-70% of the stock price of Indian metals and mining companies tends to be correlated with the global price, whatever is prevalent on the LME. And on that piece, I'm no better informed than your viewers. I read the same newspapers as they do, but the view seems to be that the moderation in global growth does spell a period of moderation in metal prices. The second piece, the second driver, around say 30-40%, the remaining 30-40% of Indian metals company share prices tends to be driven by domestic growth. And I reckon that we are seeing a moderation in domestic growth. Infrastructure, which was a driver of growth in this sector, growth demand in the sector, I think infrastructure spend will moderate as the government tries to get the fiscal house in order. So I think 5th July will be a big day for lots of us, including for the metal sector. My reckoning is the government will have to come off the throttle in terms of infrastructure spending and try to get the fiscal house in order. I think spending on pro-poor activities will sustain things like PM Kisan. I think the government will continue spending. But if the government comes off the pedal in terms of infrastructure spending, I think there's probably a period of moderation in metals demand coming through domestically.
Actually, I was going to ask you about infrastructure, but only after we have told you and our viewers the piece of good news that came at 9:15. So do stay on, Saurabh. Listening to this announcement that has come from Adani Enterprises. Anisha, tell us.
Oh, well, yes, it's a positive news for Adani Enterprises, wherein they have got the final nod for the Carmichael coal mine project. Remember, it has been stuck right from 2010, and it has been a decade-long fight that the company had to fight against the environmentalists, etc., and get in a lot of approvals. A couple of weeks ago, we had heard that the company has got one more approval, and the final one was pending. That has come by. Do remember that it is a large project worth around $2 billion that would be needed. To add to that, they would have to set up a rail terminal, and that would mean an additional additional investment of $1 billion. The company was very confident that after getting the approval, they would be able to start the work on the project from the next day itself onwards. But we'll have to check with the management whether they have the funding in place, because the funding for this particular project has been largely in question. The banks had walked out of this project, and then the company had said that we ourselves from our own balance sheet would try to do this project. But that remains a question and an overhang on the entire group as well, because remember, that raises a question again on Adani Ports, because that is the cash cow for the entire group as such. Other than that, they estimate to hold around 7.8 billion tons of coal. Of course, it will be ramped up over a period of around 5 to 10 years. But as of now, a very big sentiment boost up coming for Adani Enterprises. That the final nod has come in. But the question on the funding remains really the key.
Okay. Thanks a lot for that, Anisha. And now the question to you, Saurabh. You know, I've been speaking to some of the former governors. Now, a bunch of suggestions they are giving is that maybe a one-shot fiscal intransigence will be forgiven by the market, say if it is only for bank recapitalization, or, I mean, a large bank recapitalization, because that's what's holding up, or, you know, completion of stranded projects. Now, we know that 4 or 5 airports have been already bid for, and the Adani Group has come in tops in some 5 airports. So, you know, don't you think that something out of the box could be done for infrastructure, and the market would take it in its stride?
I think Lata, it's entirely feasible and perhaps even desirable that on infrastructure the government does do a one-shot infusion and in a way sort of do a Keynesian pump priming of the economy. The challenge I see from a macro perspective is government capex by itself is simply not large enough in our country. Our country's fiscal resources are not large enough for government capex itself to stimulate the capex cycle and get it going. For the capex cycle to come back, we need cost of funding to moderate, we need business confidence to come back, we need things like the Land Acquisition Act to be remedied. So I'm not so sure what major macro goal we will attain by doing a one-shot piece of dramatic intervention on 5th July. I think on 5th July, if from a macro perspective, it's far better that the government tries to tell the market how GST collections can be boosted. I think there's clearly room to boost GST collections. Less than 100,000 crores per month is clearly not a sustainable number. And secondly, what can be done with this array of issues we have in the financial services sector? The financial services sector is sort of the nervous system of the economy. It's the core functioning unit of the economy. It allocates capital. That is broken in our country. And I think on 5th July we need to hear of a plan to remedy the challenges and move forward. So in terms of a market booster, a market sentiment booster.
No, my question was, would you buy Adani Enterprises? Since, it's looking like mouth-watering, they've got a lot of orders, they've got clearance. Even these you won't pick up in the infrastructure space?
I think the ports asset is a superb asset. It's probably one of the best infrastructure. The Adani ports asset is probably one of the best infrastructure assets in the country. I have to confess that on Adani Enterprises Limited, I've not looked at it. It's a fairly complex entity. I've not looked at it. So difficult for me to give you a view on Adani Enterprises, but the ports asset is clearly one of the best infra assets in the country.
I also want your thoughts, because I do know that you track some of these global related auto ancillary players, Motherson, Sumi, etc. There was a report by Credit Suisse yesterday stating that the worst seems to be over as far as the demand slowdown goes, and these stocks are very cheap. I mean, Motherson is trading at 1 standard deviation below its 10-year average. Are you compelled to buy such names?
So the way I've thought about auto and auto ancillaries is this, that whether it's in India, whether it's outside India, but especially domestically, what we have in our country is a 5-6 year, in a 10-year cycle, we'll have 5-6 years of super growth in auto, right? We'll have 25% earnings growth for 5-6 years. And then for 3-4 years, we'll have a famine phase in auto. And over a decadal period, auto stocks will give anywhere between, say, 12 to 15% earnings growth. So So I'm not so sure it's so easy for us to say that the worst is behind us with regards to the auto slowdown, whether it's for the OEMs or for the auto anchs. And hence I would humbly submit that it's worth being a little bit more circumspect on auto and auto ancillaries than perhaps many other investors are, and I would far rather focus on, say, the well-run banks, the top-rung FMCG companies. And if I had to take a tactical bet, I would look at IT and pharma for my tactical bets rather than looking at auto and auto ancillaries for a tactical play.
All right, Saurabh, we leave